You're on a green card. You're going to exit the US. Why are we raising the alarm bells?
It was complicated.
Stressful.
Yes.
It must have been so stressful.
I can't imagine the level of stress. I don't think I personally have ever experienced anything that stressful.
Pick your LLM of choice, your AI of choice.
I actually love that people are using LLMs to ask questions, because I'm getting so many more people who are coming to me saying, an LLM told me this. Is it true? Does this apply to me? Do I need help?
Welcome to Expat Wealth, a Plan First Wealth podcast dedicated to helping ambitious expatriates in America and Americans overseas thrive. I'm your host, Richard Taylor, and Plan First Wealth is the business I founded and run today, and we work with successful expatriates, immigrants, and internationally minded Americans to make the most of their opportunity and avoid the expat landmines. First, a quick disclaimer. While Plan First Wealth LLC is an SEC-registered investment advisor, the views and opinions expressed in this program are those of the speakers and do not necessarily reflect the views and positions of Plan First Wealth. Information presented is for educational purposes only. Now, if you aren't already receiving our emails, please go to our website, www.planfirstwealth.com, and sign up there. It's free, and you'll be notified every time we drop a new episode, and so much more. Okay, let's get back to this week's show. Welcome back to another Ask an Expert show. This week I am joined by Debra Rudd. Debra is a CPA at Hodgen Law. Hodgen Law are a firm of tax attorneys and accountants providing cross-border tax planning for multinational families and service corporations. Debra has been with Hodgen Law PC for over 15 years, focusing on expatriation planning projects and multi-year cleanup projects for tax returns. That sounds very intense. Multi-year cleanup projects for tax returns. I'm sure there's plenty of them. So, without further ado, let's get into this. Hi, Debra. Welcome to Expat Wealth.
Thank you for having me. Good to be here.
Let's get straight into it. So, I've actually done at least one podcast with a tax attorney on expatriation, leaving the US. And I've referenced it in many more. But the reason I wanted to have you on today is I want to do this now purely through the lens of a green card holder. So whereas previously I've talked about expatriating for green card holder, for anyone, a green card holder or a citizen. And my hunch is that when someone's expatriating as a citizen, the process to do it, the bureaucratic process is so involved, and also the repercussions are so, giving up the citizenship is a major thing. Even before we get into tax, it's a major thing. That in my experience and anecdotal experience is that people do research on this. They talk to people, they look into it online, and they understand the process and also the potential ramifications, the tax ramifications. Whereas when people are on a green card, people are completely unaware that there is any such process to give up a green card, and they are equally completely unaware of the seismic and potentially lifelong consequences that can come from leaving the US on a green card and not dealing with it effectively.
Yeah, more and more I'm working with green card holders who have actually done some research up front before they got the green card, and they're planning ahead to make sure that they don't have it long enough that they'll become an expatriate when they terminate the green card. I'm seeing more and more of that, which is really great, and I love working on those projects because we can avoid some really bad stuff.
The life of an expat is inherently changeable. I can't tell you the amount of people I've met who've said, I'm never leaving the US, who have since left the US. It's just... one day you wake up and you feel differently, and you want to go home or you want to go somewhere else, and people do. Not everyone, but it's inherently changeable.
Yeah, and especially people who have citizenship in another country or grew up in another country. It's not the same as, me, for example. I grew up in the US and truly probably will never leave because it's just wherever, my entire life is here. But for someone growing up in another country, it just totally makes sense.
Why do you think where's the passion for expatriation projects come from? Why do you think this is quite a niche within a niche? Why?
I think part of it is that it's such a big decision point in people's lives, and there's some really, if you don't know what you're doing, you can really do terrible things to your life by just pulling the trigger on expatriation without knowing what you're getting into. And I really like I feel like it's somewhere I can help. It's somewhere I can make an impact and prevent bad things from happening. And, I've seen situations where when I got my start in tax, it was during the whole 2009 OVDP situation where we had this look back period where we had to do reporting for people's accounts, foreign accounts that they had. We had like I forgot, it was a 6 or 8 year look back period. So we were looking at like 2002 through 2008. And if you remember that period in time, part of that era was very prosperous. And then the stock market took a massive nosedive in 2008. We were having our clients pay penalties based on the highest balance during that time period in their foreign accounts. So people's foreign accounts went up. They had a high balance in, 2004, 5, 6, and then the account value went down by 2008. And so they had very little money left in the account, but they had to pay a penalty based on the high balance. So I was working with clients who were getting their entire, life savings wiped out by IRS penalties just so they could sleep at night.
You have seen that happen?
Yes. Yep.
Because, one of the things that gets lobbed at me occasionally in webinars and other places when I'm explaining the potential consequences of non-compliance with the US, with the IRS, sometimes I will get someone will lob a comment at me like, yeah, but how often does this happen in reality? Almost like accusing me of scaremongering, or everyone we've ever worked with is if they're in non-compliance, it's accidental, not intentional. And most people voluntarily want to come into compliance. And for that reason, there are programs, what you've just mentioned one, there are programs that people can take advantage of that limit the potential penalties. But, and as a result, I've never seen someone like ruined by this, but you have essentially seen this.
Yeah, I've seen what people would consider as sort of, maybe they had other retirement plans or accounts, but sort of I've seen them have to give up a massive portion of their big nest egg that they were relying on going into old age.
Was it OVD? So you're talking about the one where there has been some intentionality, right? You don't qualify for the non-willful, the more lenient package.
So what I'm talking about was my experience back in, it was like 2010, 2011, before they started putting people into Streamline.
There was one option, and it was, before there was the not.
That's, yeah, I believe that was the case at the time. And then they offered like an opt-out after a year or two of working with clients. I remember there was an opt-out situation where people they had entered the OVDP, but then they could change their mind and opt out into Streamline procedure instead.
Oh, really? Okay, right.
And some people were choosing to do that and getting much better results. But at the beginning, the first people who went through that, there were some bad situations. There were some bad results.
Wow. And I just want to, so what you're referring to is when people go through these compliance route into compliance, you go back and do 6, or in some cases 3, 6, and it used to be, I think, 8 years tax returns. And penalties are based on the end year values, but the highest year. So if you go back 6 years, the penalty is based on which was the highest value. And to your point, if you're doing this in 2008 when the markets fell like 50%, and they fixed the penalties 2 years earlier when the market peaked, that's going to really hurt. Wow. Yeah.
And so just that experience working with people who had inadvertently ended up in terrible tax situations that just had massive impacts on their emotions, on their personal lives, on their family relationships. That kind of, I think, really inspired me to want to find some area where I could help people before the bad things happen. And I think that's kind of a big part of what led me into the expatriation area eventually.
All right, very interesting. Right, well, let's get into it then. So, on a green card, or thinking about you're on a green card, you're going to exit the US. Why are we raising the alarm bells?
For citizens, it makes sense, right? When you're a citizen and you leave the US, you might have to pay what they call an exit tax. What's really strange is if you have a green card, if you're a permanent resident but not a U.S. citizen, and you've had the green card for long enough, as the IRS defines it, if you've had the green card for a long enough period of time and then you give up the green card, you also could be subject to exit tax. So even though you were never a citizen of the United States, you were a U.S. taxpayer long enough as a permanent resident, you terminate that status, and suddenly the IRS wants you to pretend you sold all your worldwide assets, even the stuff you accumulated before moving to the US, and pay the IRS a tax on any gains that you've accumulated.
Yeah. And not just that, though. The exit tax is what gets all the headlines, but there's if you've got US citizens and kids, there's a potential lifelong transfer tax to them.
That's even worse than the exit tax. Yeah, absolutely.
Yeah.
That's actually, and I'd say most of the time when I'm doing planning projects with people, they approach me to talk about exit tax, and we talk about exit tax, but then I say, but the bigger problem might be this Section 2801 inheritance tax, or just, even in the case of people who don't have U.S. citizen children, you still have U.S. estate tax if you keep your U.S. assets after expatriation, but you lose the $15 million unified credit.
Oh, so you go down to what, $60,000 or something?
Yes.
So anything you keep in the US, property, investment portfolio, you get $60,000. Anything after that, it's 40% tax, right? Okay, yeah.
Exactly. So estate tax is a problem. Estate tax is a problem whether you're a covered expatriate or not, whether you're paying exit tax or not, if you continue to have U.S. assets. But then, you're right that the Section 2801 is an inheritance tax on all your worldwide assets that could go to a U.S. citizen heir or a U.S. resident, as defined under the gift and estate tax rules.
Mm-hmm. Okay, so you mentioned it there, covered expatriate. So this exit tax, transfer tax, this only applies to covered expatriates, right?
Right.
I'm on a green card. When do I become a covered expat?
So there's 3 potential triggers to make you a covered expat, and there's some exceptions to the rules too. The 2 easiest to get caught in, the 2 easiest traps are, number 1 is the certification test. You have to be able to say, they say under penalty of perjury. Anything you sign on a tax return is under penalty of perjury, really. But you have to say that you're 5 years before the expatriation year, you filed your tax returns correctly and completely, and you paid all your taxes. And that seems like an easy thing, but a lot of times, probably the biggest issue is a lot of people have foreign pensions or foreign retirement accounts that they never knew they needed to report on their U.S. tax returns. So it's time to expatriate, give up the green card, and they realize, oh wait, I never reported this account on my Form 8938 every year. So now I have to go back and fix that. And oh, by the way, was I also supposed to file a Form 3520 because it was considered to be a foreign trust?
I just want to jump in here and say, in my experience, almost every single person we've come into contact with, so we only work with expatriates. So every single person we come into contact with has some level of like non-US complication in their affairs. And I would posit that almost every single one is in some form of non-compliance. There is always some forms missing. Always.
Yeah, and a lot of times it's really trivial stuff when you think about it. Like, oh, I have this foreign retirement account that's worth, $40,000 US dollars, and it accumulates a little bit of investment growth each year. But I'm supposed to be filing this whole other set of forms like 3520, 3528 to report it as a foreign trust when, if you look at the tax treaty, it's not even taxed under the treaty. So why am I doing this? But that ends up being the result in a lot of situations. So that's one trigger for covered expatriate status is non-compliance over the last 5 years. And as you mentioned, non-compliance it sounds bad, but it's such a common thing because people just think like, my 401k or my IRA, I don't have to worry about doing any special reporting for that. So why would the foreign equivalent of that require special reporting? It doesn't in the other country. Why would it in the US? So very, very common.
So if that was the only test, I guess that's a relatively easy one to fix. Not by relatively easy, I don't mean free, because right. I guess that goes back to this multi-year cleanup exercise that you talk about where you've got to go back 3 or in this case, I guess 5 years and file amended returns. And whether you do that through an approved program or not, whether there's penalties, that's all facts and circumstances of the individual, I guess. But if that was the only test, it sounds like that could be remedied.
Yeah, it's not too bad. where things get worse is there's also a net worth test. And this is the one that catches more and more and more people because they don't apply an inflation index to this number. So if your net worth, your personal net worth is US $2 million or more, then you're a covered expatriate.
And this is worldwide assets.
Worldwide assets. Doesn't matter when you acquired them.
Including pensions.
Yep, including pensions. So it includes present value of pensions. I've unfortunately talked to a lot of clients who said, I'm starting to receive pension distributions, so that's increasing my wealth by $10,000 per month because I have this pension income. And I have to unfortunately tell them, no, you already are considered to own the entire present value of that pension, not just $10,000 this month and $10,000 next month.
It catches defined benefit pensions as well.
Yes.
Even ones that aren't in payment.
Correct. Yep.
Wow.
Yeah. So that all goes into your net worth calculation. Beneficial interests in trusts. So if there's a trust where you're a beneficiary, even if you haven't received distributions, but you might, you have to calculate your beneficial interest in a trust as well. So there's a lot of areas that are kind of gotchas. But the biggest thing is it's $2 million, which is a smaller and smaller and smaller number. That's no longer an ultra wealthy person number. That's, a very common number to hit, especially if you've been, as a lot of green card holders, especially if you come to the US, maybe you work in tech, you spend 20 years working here, you got some stock options many years ago, and maybe it was Microsoft stock. And 20 years later, that stock is worth quite a bit more than it used to be. So yeah, you get over the 2 million pretty quickly in those cases.
People don't move to the US for the good life. The La Dolce Vita. If they're going in search of that, they go somewhere else. People come to America because it is the undisputed champion of kind of capitalism, right? They come here because they've got a tap on the shoulder, usually with their employer. Go on, do you fancy trying your hand in America? And people take that because it's such a tremendous opportunity. They come here to really make it. So someone who's come to America and has spent 10, 15 years 20 years on a green card, in all likelihood, in that time, has amassed a significant amount of wealth. And all being well is well beyond that 2 million barrier. So that is going to catch a lot of people.
Yeah, absolutely. And even, it even captures, at this point in time, it even captures people who weren't trying to amass a lot of wealth, who maybe moved to the US and married a US citizen. And it was just a matter of love. It wasn't even about wealth. And I'm seeing people who have just over $2 million. Those are the saddest cases, just a little more than 2 million, just enough to put you into trouble. It's just a much, much smaller number than it used to be.
Okay, well, what's the third test?
Third test is tax liability test, and this is probably the easiest one to pass. But if you are high income, it's hard. And this one says if your net tax liability, and there's a definition for that. It includes certain things. It doesn't include other things. But basically your tax liability after you include foreign tax credits, if that number on average for the 5 years before expatriation is, I think the 2026 number is $211,000 or more, then that makes you a covered expatriate. And that's your tax liability, not your taxable income.
Okay.
So tax liability average 211,000.
So that's going to catch high earners.
Yeah.
The 2 million is going to catch a lot more people. And the 2 million net worth figure and the 5 years worth of compliance is going to potentially catch everyone, but that can be remedied. Yeah. But the problem is the rest can't very easily. And we should note as well, these tests don't apply to everyone on a green card, right? They apply to, on a green card, if you consider a long-term permanent resident.
Long-term resident. Yeah, that's the term. And it's defined as anyone who's had their green card in 8 of the last 15 years. So not for 8 of the last 15 years. There's a really big distinction between in and for. In means during. So if you've had your green card for only 1 day of the year, that counts as 1 year towards the test. So you don't look at it as, I got my green card on November 25th. So next year at November 25th, I hit 1 year. It's, you've had it on November 25th, so November 25th to December 31st is 1 year for a green card test, for the long-term resident test.
So the officially people hear the 8 years number and think, oh, I've not had my green card for 8 years, but really, it can be more like 6, just over.
It can be 6 years and 2 days.
Yes,
you can have
potentially
1 day from the prior year, 1 day from the next year, and you're in 8 years.
So if I've had a green card for 4 years and I leave and I go through the process of giving up my green card, which we'll come back to in a second, I don't need to worry about these tests. I'm not a long-term resident, and I don't take the tests. Therefore, I can't be a covered expat. So I've got nothing to worry about.
Yeah, if you terminate your green card before you hit the 8 years, you're not even an expatriate. You just convert from a U.S. tax resident to a non-resident, and you don't file Form 8854 to report an expatriation.
Oh.
You avoid expatriation entirely.
Okay, interesting. Right. I didn't know that. So let's say now I've had it for more than 8 years. I've had it for 10 years. No question I've had it for more than 8 years, but I'm in compliance. I've got a net worth of $1 million and I don't hit the tax liability issue. What then?
In that situation, you're very similar to the person who never hit the 8 years. You can terminate the green card. You're not covered, so you don't have to worry about exit tax. You convert from U.S. resident to non-resident. And the only thing that's different about you is you have to include Form 8854 with your tax return to report the fact that you expatriated, and to report information about your expatriation and your net worth and your tax liability for the prior 5 years. So you put all your information on this form, and this form shows the IRS, hey, I expatriated, but I was not a covered expatriate.
Hey, I'm leaving, but look, I don't trigger any of these tests. Therefore, I'm not a covered expat, so please leave me alone.
Exactly.
Just let me leave quietly.
Yes.
Now, I've had a green card for 10 years. I've got a net worth of 5 million, let's say.
Mm-hmm.
Ignoring the other tests, just that, I trigger it on the basis of that, then what?
So then you're in a situation where hopefully you're planning ahead before you terminate your green card. You're thinking about what's going to happen, and you're doing some research and maybe even talking to professionals. And you want to look at, okay, if I'm going to expatriate, I have 2 potential problems. One is I have exit tax, and the other is the Section 2801 inheritance tax. So, first of all, you want to look at, okay, is exit tax a problem? Yeah, so I have to pay exit tax, but what is my exit tax going to be? So, it might not be bad. Like, you get an exclusion. It's the first 900 and something $1,000 of gains are excluded from exit tax. If you have foreign pensions that were acquired before you became a U.S. resident or citizen, you can exclude those from exit tax, so you don't have to pay exit tax on those.
What, entirely?
Depending on when they were accumulated, yes. If you contributed into them once you became a U.S. resident or citizen, then the portion attributable to that period could be subject to exit tax. But there is a rule in the exit tax rules, I think it's 877 Cap A D5, I believe, that says you can exclude pensions that were accumulated before you were a U.S. resident or citizen.
What about growth? Let's say it's not a money purchase international pension. What about, I didn't contribute to it, but it grew and I received it received dividends and income. Would that?
Yeah,
I think
I think because that's all allocable to before you became a U.S. resident or citizen, you get to exclude that.
Great.
Just because you're a covered expatriate doesn't necessarily mean your exit tax is bad, especially if you're in that window where, like, maybe your net worth is $3 million, but your basis on everything is like $2 million. So you really only have $1 million of appreciation in your assets. Most of that will be wiped out by gain exclusion. Maybe foreign pension rules can make it so that you don't have to pay exit tax on those. IRAs are bad. 401ks are good for exit tax. Like if you have a 401k, you can make it so that there's no exit tax on that. Instead, you just have a 30% withholding on distributions. But IRAs are bad. IRAs are a deemed lump sum distribution on the day before expatriation. Nothing you can do about that. So if you're approaching exit tax and you've set your life up in the right way, exit tax itself might not be that big of an issue. But then you have to look at the other side of it, the inheritance tax. Are there going to be U.S. people inheriting from you? And if they are, there's a 40% tax on worldwide assets that they inherit from you, and they have to pay that tax at the time they inherit it. So let's say you have a Swedish citizen. They were a green card holder, moved back to Sweden, give up the green card. Their children inherit their real estate in Sweden and have to pay a 40% inheritance tax on the U.S. With what cash? Because what they inherited was real estate, not cash. So it can be a real problem.
And it's the exit tax itself can be a horrendous problem, right? If you have
absolutely,
if you're not a marginal case, if you're 10 million net worth, and the day before you leave, everything is deemed to have been sold or distributed, everything that's included in the calculation, nothing has actually been sold or distributed. That can be devastating. You've suddenly got to come up with hundreds of thousands, millions of dollars in taxes, and you haven't actually sold or liquidated anything.
Right. Yeah. It's a really big problem. That gain exclusion only goes so far once the numbers start getting a lot bigger.
I'm excited to announce that Expat Wealth has its first sponsor, the Global Financial Planning Institute. The GFPI exists to provide education, community, tools, resources, and ongoing research for financial planners and other advanced financial professionals working with international and cross-border clients in the US and Americans abroad. I'm a GFP Institute Fellow, and I've put all our employees through their GFPI programs when they join us. I've met some great people. I've learned a ton. It's a genuine community of internationally minded folk doing their best to serve their clients properly and, critically, sharing what they know in the oftentimes challenging and ambiguous US cross-border environment. And as anyone in this sector will tell you, you're always learning. So if you work with international clients and or Americans abroad, or if this is an area you're looking to get into, check out the GFPI at www.gfp.institute. You will be glad you did, and I hope to see you there soon. This is why I wanted to make this episode specifically and only for green card holders, although almost all of it applies to citizens as well who are giving up the citizenship. But to my point earlier, that those aren't the ones I'm worried about because they go into this with their eyes wide open. It's those on a green card who all that potential stuff we just discussed applies to them. And much of it can be mitigated or at least managed through planning. But for reasons we're about to discuss, time and time again, these people are unaware of all this stuff, are unaware of the process to actively give up the green card and can get themselves into some real pickles. So what I'm referring to is the amount of people who do not realize that there is a process to give up a green card, both with USCIS, the immigration services, like a formal process to give up your green card, and separately the form you mentioned earlier with the IRS, if you're a long-term resident, to file your tax return. They don't realize that there's this process, and a lot of them think they can just leave the US with a green card. And, I've literally heard people say, I'll keep it in case I want to come back. And it terrifies me to think of the amount of expired and unexpired green cards sat in drawers around the world of people who think they have left the US, and literally physically they have, but because they haven't gone through this specific process, this bureaucratic administrative process of giving up their green card, in the IRS's eyes and the US's eyes, they haven't given it up.
Yeah, I just the other day I talked to someone who left the US in 2001 and never turned in the green card. And so he's now in 2025, 24 years later, he's going to go file 5 years of US tax returns and do some pre-expatriation planning and send in his expired green card and be an expatriate 24 years after leaving the US.
Well, Debra, so I've got to I can't let that go. I need to ask questions. Why 24 years? Have they been back to the US since? How did they become aware of this?
Yeah, I don't know all the facts of that particular situation, to be honest with you, It's just someone I talked to. They just reached out and wanted to get some information about how it all works. And he had already gotten some prior advice from a tax lawyer and an immigration attorney, and he was talking to me about tax returns. So he already had made his decision about this is what I'm going to do. But yeah, 24 years after leaving the US, moved to Canada, and did stop filing tax returns in the US. And so I think, I don't know if there was any sort of decision made, or it was just kind of a life happens and you just carry on and do what's in front of you. You just do what you're in Canada, you file your Canadian tax returns.
I don't want people to think that I'm like pointing fingers. When we left the UK or wherever you've come from, most people just upped and left. There aren't these lifelong, there isn't this process to go through. It's just, when you are leaving, you've got a million things to think about. And because an exit tax and this whole regime is so unusual, people aren't thinking of it. It just doesn't occur to people, and it can have real consequences. So this person left the US in 2001, didn't get the green card. Well, as far as the IRS are concerned in the US, they've not left. They are still a US person. They should have been filing US tax returns every single year. They're definitely a long-term permanent resident because they've had the green card for however long, even though this particular green card will have expired decades ago and they can't use it to actually gain entry back into the US. So it's like the worst of all worlds.
Yeah, absolutely. And that's why it's just so important to do some planning ahead of time. And what's really unfortunate is that people just don't know they need to do planning. It's not like people know there's a problem and they say, I don't care. I'm not going to deal with that. That won't be a problem for me. Is people just literally don't know.
Yeah. Well, what about a huge danger, which is this has happened. Someone's left the US on a green card. They've not rescinded it. They didn't realize they had to. A year, 2 years, 3 years later, they try and enter the US. Let's say on that green card. Mm-hmm. What could happen then?
Yeah. So, again, I'm not an immigration lawyer and I don't know the latest information about what happens in that particular situation if you show up on an airplane coming into the US. But anecdotally, I had a client a few years ago who did this. She had been living outside the US for quite some time and was finally getting around to cleaning up everything in the US. And she was planning to terminate her green card. But as part of this, she needed to travel back to the US to sign some paperwork because she was selling a piece of real estate in the US. So she was going to come into the US, I think clean out the house, get rid of all the stuff inside of it, sign the paperwork, get the sale done. But when she hit the border, they said, we need you to sign this form, I-407, and we're going to take your green card. And so we got a frantic phone call at our office and we said, well, we're not immigration lawyers, but you need one right now. So we put her in touch with an immigration lawyer. And I think what ended up happening was at that time, she was allowed to enter the U.S. without signing the I-407 and turning in her green card.
The I-407, if she had signed that would have been her voluntarily giving up the green card on that day, right? And people will sign this just thinking, oh yeah, if I sign this, I can enter the US in no problem. What they don't realize is that by signing that is the expatriating event, and therefore this test, for the exit tax happens essentially the day before, and it happens, and it's done with zero planning. So you get to the border. They ask you to sign this I-407, and if you do so, they'll tell you you'll be able to enter the US, no problem. You sign it. Well, you have just expatriated, and the IRS is going to look at your worldwide assets and deem that you sold and distributed them all the day before, and you have got an opportunity. You have done zero planning. That can absolutely wreck your financial affairs. Wreck them.
And thankfully, this client had already talked to us, and so she knew I-407 was the green card termination. So when they asked her to sign it, she said, no, hold on, I need to talk to my advisor. So she called us. We put her in touch that day with an immigration lawyer. And I don't know what happened in that conversation. I don't know what they advised her. But somehow she was able to say, no, I'm not signing the I-407 right now. And I think they gave her a court date for a few months later, and she was allowed to enter the US, but I think she had to stay in the US until that court date. So she was able to kind of wrap up her affairs in the US, do what she needed to. Unfortunately, she ended up having to stay for, I think, 2 or 3 months when she was not planning to stay that long. So that ended up being an expensive trip. But she was able to do what she needed to. And then somehow, working with the immigration lawyer, she did end up voluntarily signing the I-407. I think they avoided all the court proceedings because she was able to just take care of it and get back out of the country.
So in that 2 and 3, so bear in mind this client had just turned up in the US thinking, I'm making this up, but a couple of weeks, clean the property out, sell it, get back to my life, my family in my home country, and instead she got waylaid at the border. She had to stay here for 2 or 3 months. But which I'm sure was expensive and unpleasant, but also gave her the opportunity to move stuff around and avoid the worst consequences of expatriating.
Yeah, actually, it was difficult too, because she had to do things with accounts that were in other countries, and she wasn't able to be physically present there.
Man.
So it was complicated.
Stressful.
But yes,
it must have been so stressful.
I can't imagine the level of stress. I don't think I personally have ever experienced anything that stressful. So I try my best to relate and be empathetic, but I also don't really have an anchor point in my experience for something that terribly stressful.
And this has a happy ending. She expatriated. She wasn't a covered expat. Assuming where the story was going, and she was able to leave without any immigration issues. So she kind of won, but blimey, that must have been stressful. And it could so easily have gone the other way, right? If she wasn't already talking to you, if she'd got to that border and just signed the 407 thinking, oh, this is the solution, not realizing that the cascade of consequences that would fall upon her or her family thereafter. Yikes.
Yeah, and then also, too, I wonder about how many people sign the I-407 and have no idea that they just expatriated, and how long is it before they find out? Is it 2 or 3 years later that they realize that they were supposed to pay an exit tax several years ago? That's a problem, too.
That's going to be a problem getting back in. And if they did owe it, I assume, knowing the IRS as I do, interest and maybe penalties are growing ever thereafter.
And if you're someone who you didn't know you were expatriating, so you didn't do anything to meet the certification test, for example, the 5 years of tax returns, but otherwise you wouldn't have been a covered expatriate. It's just all kinds of terrible permutations of situations that could happen there.
Yeah, you could be under the 2 million, couldn't you? And because you're not in compliance, which no one is, and you're certainly not going to have been if you've been out in the US for 2 or 3 years, unknowingly that you weren't to be doing returns, you're de facto a covered expat, and then this whole regime falls upon you, and you're a covered expat ever after. Oh man.
Yeah.
Wow.
I mean, I think we're going to enter a time when these types of things eventually become less possible, just because there's going to be so much bureaucratic red tape that people will get caught somewhere along the way and will figure it out earlier than, oops, I expatriated 3 years ago. I think eventually we'll get to a point where it'll be less possible to end up in those situations, but we can't rely on a system to save us. Like, the system is not designed to save us. The system is designed to catch us.
Deborah, I hope so. I don't know though. I've been in the US for over 10 years now, and I am not sure that people are any more aware and knowledgeable on informational reporting than they were. Certainly not new people. It still shocks me.
I'm in the unique position of telling people about it all day, so I feel like more people know, but it's only the people I've told. So your perspective is maybe a little more accurate than mine, because I'm out here spreading the word on this,
This podcast is about that, but I'm still shocked by how often we're getting the same questions, queries, and how many people are still caught out by it. And there's so much more information out there about it now.
Yeah.
And as we're all more online, I don't think more people must know. There's so much more information about this than when I moved here. And we're all so conditioned to asking Google, or now, which pick your LLM of choice, your AI of choice. There's
I actually love that people are using LLMs to ask questions, because I'm getting so many more people who are coming to me saying, an LLM told me this. Is it true? Does this apply to me? Do I need help? And it's so much better that people are able to just ask a question and get some kind of information about their situation that says, you might have a problem, you need to do something.
We've actually found that far from replacing us, it's actually meant that people who are using LLMs will turn up to meetings with us better prepared.
Yes.
And it means that we don't have to deal with like the 101 of like financial planning or 101 of portfolio management. We can kind of skip that part or the 101 of being an expat in America. We can skip that and get straight to like the good stuff, the important stuff, the valuable stuff. And that's been really useful.
Yeah. It's giving us better educated clients. I mean, LLMs can be wrong, sure, but they get it right enough that people can ask really, really good questions about their situation, and they can come into meetings knowing enough that it's easy to have a conversation about technical stuff.
Absolutely agree. You know, I wish there was a way we could get every green card holder in America to listen to this, and even better, every single person on a visa. If you're on a visa, you haven't yet got a green card, listen to this first. It might mean you never go for a green card. It might mean that you delay going for a green card, knowing that you've got that 6 to 8 year window before you become a long-term resident, and therefore the covered expat questions apply. I wish we could get this to every single green card holder out there.
And I'm working with an increasing number of people lately who have had the green card for 4 or 5 years, and they find out that this could be a problem in a couple years, and they talk to me ahead of that and make their plan and exit the U.S. before this ever even catches them. So it's...
you have found people leaving?
Yeah. I really like the people who are... I like it for them that they're able to find this information and plan ahead and avoid the bad situations.
It's a shame that people are leaving before they naturally would do otherwise, but...
Yeah, I mean, that's a whole
different
immigration and tax policy conversation.
We're not going to cover that now, don't worry. I'm not going to ask you for your thoughts on that. Debra, where can people find you?
You can find me on Hodgen.com, HODGEN.com. My email address, Debra.Rudd@Hodgen.com, is the best way to reach me, or find our website and reach out to us. We have our contact info there.
I know on the firm Hodgen, you are attorneys and accountants.
Yeah.
So for people who don't understand why I think that's important, you do a lot of like compliance stuff, and it means that you're having your attorney and your accountant who provide very different roles in that compliance process within the same firm is I think a very useful setup.
Yeah, I think as a CPA, I have potentially a lot of people's kind of dream job, actually, because I have access to an experienced attorney right where I work. A lot of CPA firms don't have that. A lot of accountants don't have that. So for my own development as a CPA, everything started with Phil Hodgen, the owner of the firm, saying, well, what does the code say? What do the regulations say? And at first I had no idea what he was talking about. But over the years, I did learn all of this, obviously. But it's just having that sort of tax law overlay as your first approach to understanding how tax returns work. It's just incredibly valuable, especially when you're working in international tax. So I very much appreciate that atmosphere as an employee, as a return preparer, as an advisor. But yeah, absolutely for clients, I think it's an incredibly valuable thing.
Well, thank you for coming on Expat Wealth and talking us through that. I hope we can get this to as many current green card holders, future green card holders as possible, and help them avoid making a big mistake.
Yeah, thank you so much for having me on. Really appreciate it and enjoyed our conversation.
Me too. You're very welcome. Thank you. Thanks, Debra. See you soon. All right, folks. That's another episode of Expat Wealth under our belts. Thank you for listening. I appreciate it, and I appreciate you. If you're enjoying the show and would like to support the mission, which is to help ambitious expats thrive in America, I'd ask you to subscribe to the pod wherever you listen, and also consider leaving a rating and review. This stuff really does matter. Please help us get this information to the people who need it, that is, to your fellow expats. Just a quick reminder that this show is brought to you by Plan First Wealth. We are a US-based financial planner and wealth manager, and we help successful American and international families living across the US to make the most of their opportunity and ultimately to retire happier. If you'd like to know more about how we might be able to help you, you can find us on our website, www.planfirstwealth.com, or you can look me up on LinkedIn. Do get in touch, we'd love to hear from you. As always, thank you to the podcast guys for their help producing this episode and the entire show. See you next week.